Good evening, all the joinees. Hi, this is Ansu. I welcome you all to the webinar conducted by NGEN Markets. By the time the others join in, let's have a look at today's webinar topic. So, today we will be majorly focusing on how you could create your model portfolio. And in order to create that portfolio, we would be making use of NGEN Fund Score. Followed by that, we will be taking you to a detailed portfolio analysis. So we will be trying to understand what does NGEN Fund Score stand for, basis that how you can shortlist your funds from categories that you set up. In addition to that, we would be looking upon various portfolio level analysis, such as how is your portfolio performing against a benchmark, which you can create and set aside. In addition to that, we will be looking upon the asset allocation of the entire portfolio, that is, the exposure and their concentration. In addition to that, we will be talking about the risk and returns that are undertaken by the schemes of the portfolio. In addition to that, the risk and returns of the portfolio vis-a-vis the benchmark. And lastly, the topic that we would be covering will be the drawdown analysis, which on a portfolio level will let us know how quickly a portfolio is recovering from any loss that has happened in the past. And lastly, the quorum would be open for a topic related Q&A. So we would request all the participants to take up only today's topic related questions once the webinar is completed. Any other topic, if you require any resolution or if there is any query related to anything else, you could drop down your mobile number in the chat box and our team can reach out to you post the webinar. So let us begin. So this is our landing page on NGEN Markets, which is the Markets tab. Now, firstly, in order to understand NGEN Fund Score, I will take you through a detailed single fund analysis. Now, multiple ways how you can arrive at a fund level analysis. I will simply be using this option called as Search Fund. I will be typing in the name of the fund, and once clicking on that, you can go forward with a single fund analysis. Now, next to the name of the fund, you could see a black tile mentioned as NGEN Fund Score. Once you click on that tile, it can give you an explanation of how is this score arrived. So the score ranges between 0 to 10 as mentioned right in the write up for this NGEN Fund Score. The more closer it is to 10, the better is the score. Now, the parameters that we take under consideration for the scoring is as well mentioned on a transparent basis on the platform itself. So, we take into consideration AUM. 10% weightage is given to the AUM of the fund, and the remaining 90% is equally distributed between the short, medium, and long term returns and volatility. That is, short is equivalent to 1 year, medium is equivalent to 3 year, and long is equivalent to 5 year returns and volatility. So we talk about 1 year returns and volatility, 3 year returns and volatility, and a 5 year returns and volatility. Each of this will be having 30 30 30 allocation, and within that 30, it will be again equally distributed between returns and volatility. That is, 15% goes to return and 15% goes to volatility. Now, these were the two quantitative parameters that we talked about, that is AUM and the returns and risk parameter. We also have a qualitative parameter that we take into consideration while allotting this score, which happens to be the age of the fund. That is to say that a younger fund would have a lower score when you compare it to that of an older fund. Typically, because the younger fund would not have enough data to prove its performance against the market. And hence, the younger fund will have the disadvantage of having a lower score. But this disadvantage would be removed as soon as the younger fund completes a total of 5 years in the market. That is because the long term period that we take into consideration is 5 years. And hence, as soon as a fund completes 5 years into the market, its consideration in terms of fund score will be at the same level with that of an older fund. In addition to that, this score is comparable intra category only, that is, within category comparison. You cannot compare the score of a large cap fund with that of a small cap or a flexi cap. It's not possible. And also, the score changes on month basis. The history of this fund score can be seen onto this blue line chart that you see right here. In addition to that, this history of fund score can also come up into this Excel download as well. Now, once you click on this black tile, it will show you the fund score of every fund under a specific category just towards the right hand side of this NGEN Fund Score explanation. Now, once we are through with the NGEN Fund Score explanation, the next step that we will be going forward is creating a model portfolio basis the NGEN Fund Score. Now, for that, I will be moving towards this single fund analysis. I'll be moving towards this funds tab. Now, in this section, there are two tabs that can help you while creating a model portfolio: Screener as well as a robust query tab. For today's webinar, we will be making use of this Screener tab. Now, let's say I wish to create a portfolio from debt and hybrid asset class. For that, all you need to do is click on this filter categories as an option. Once you do that, four buckets, which are typically the asset classes, show up right here. And you could select multiple categories just by clicking on the checkbox that you can see. So let's say in my portfolio, I want a scheme of flexi cap. Then I want a scheme from large and mid cap, followed by that a multi cap fund and a small cap. And also from the hybrid category, I would be selecting conservative hybrid right here. So as of now, we have selected 5 categories, 4 from equity asset class and 1 from this hybrid category. Once we have selected the category, you just need to click on this cross and all the funds that are a part of this 5 categories will show up. However, if you view right here, it says only 50 results are coming up. However, typically these 5 funds will have any time more than 50 funds. The reason is by default, we show only top 50 funds. You could click on this drop down and increase the list of funds that you wish to view and click on apply. So right here, it says from this 5 category, there are a total of 153 funds available. Now, the second option, how you can filter the list of funds is basis AMC. So just below filter category, we have an option called as filter AMC. Once you click on that, the list of all the AMCs will come up right here. All you need to do will be click on the name of the AMC whose funds you wish to view. Just by doing that, only those specific AMC related fund will show up. So for now, I am not filtering it basis any AMC. I wish to see across all the AMC. Followed by that, we also have few more filters that are available in the screener right here under apply filters as an option. The first happens to be capping the funds basis the minimum AUM, followed by capping it basis a specific age of the fund. Next is capping the funds basis a specific time period minimum return, wherein from this drop down, you could select the time period for which you wish to view a minimum return. And are these minimum Sharpe and minimum historical VAR, which is value at risk. So let's say, as of now, I'm just using two filters, which is AUM and age. So I'm just putting in, let's say, a minimum AUM of 3000 crore and a minimum age of 5. And any data that you put in this apply filters as an option, you need to make sure you click on apply so that the filter can take into effect. Once that is done, now you can see our list of fund has gotten shortened. From 153, we are now left with 64 such funds only. These are those funds which are meeting these filter parameters of AUM being 3,000 crore and above, and an age criteria which is 5 years and above fund. Now, once our schemes have been shortlisted, we will be selecting funds from each of these category basis the NGEN Fund Score. Now, for NGEN Fund Score, you could view the column right here, and you see that this column is highlighted in blue color. So this is an identifier basis which the funds in this screener section is sorted basis which column. That is to say, currently the funds are sorted basis NGEN Fund Score, and hence it is highlighted in blue. Now, if I simply sort it basis the AUM just by clicking on the column heading, you see the AUM column now comes up in a blue color. Hence, an identifier letting you know that the data currently is sorted basis the AUM. I'll again come back to this NGEN Fund Score. And from each category, now I will be selecting one fund to create a model portfolio of mine. So from FlexiCap as a category, the best performing fund basis its NGEN FS is 9.88, which is Parag Parikh. What I will be doing now is clicking on this compare icon, and by clicking on that, my list of fund will move directly to this compare section, from which we will be having an option to instantly create a portfolio. So as of now, I have moved the fund from one category. Next, from large and mid cap category, we have iPro. I'll again click on the compare icon. Followed by that, from multi-cap category, we have Nippon India Multi-Cap Fund. Next to that, we go to the small cap category. We have Bandhan Small Cap Fund. I'll click on this compare icon. And now we are done with 4 category. The last category being the conservative hybrid. We come right here. It says the best performing is iPro Regular Saving Fund. I currently do not want to take funds, 2 or more funds from the same AMC, because right here I had taken a large and mid cap fund of iPro. So I would be going forward towards the next best conservative hybrid fund, and that is right here, which is SBI Conservative Hybrid Fund. So I'll click on this compare icon. So as of now, we have moved 5 funds, the categories that we had shortlisted. One fund from each category we have moved to this compare section. Now, right here, as I highlighted, you have an option to instantly create a portfolio by clicking on this option called as Convert to Portfolio. Now, before converting it to a portfolio, I would be wanting to check the overlap of the schemes that I'm trying to create a portfolio out of which. Typically, overlaps will let you know the common underlyings between every 2 fund that you're looking upon. And we would want to see that the overlap between the 2 funds is minimum or lower, so that the entire portfolio does not get impacted drastically. So in order to understand that, we have given certain color coordinations available right here. So if the overlap is colored in this lighter and dark green, it is said that it is well within the limit of, let's say, a 40%. As soon as your overlap goes beyond a 40%, the color keeps on getting darker. That is yellow, pink, or red. That is how the overlap identification could be done easily on our platform. Now, I'll also quickly let you know how you could read this overlap parameter between every 2 fund. For example, I'll read between this 26%. On the left, right here, we could see iPro will get highlighted once I keep my cursor on this 26%. And on top, right here, you could see Nippon India Multi-Cap gets highlighted, suggesting that both these funds have similar overlap to an extent of 26%. Now, once you click on that tile, it can also give you an explanation for the same. So it says iPro Large and Mid Cap and Nippon India Multi-Cap Fund has all these stocks in common in their respective allocation. That is to say that iPro Large and Mid Cap holds Axis Bank to an extent of 3.21% of its portfolio, and Nippon India Multi-Cap holds Axis Bank to an extent of 3.99% of its portfolio. Now, minimum out of these 2 data is what we consider for the purpose of overlap calculation. And once we total this last column of overlap, we arrive at this 26%. The data that you see onto this tile is a combination or a accumulation of the total overlap between every two funds. So since this portfolio that currently I'm looking upon have the overlap, which at max is to an extent of 26%, which is well within the limit, what I will be doing is clicking on this option called as convert to portfolio. So instantly an equally allocated portfolio will get saved into my portfolio section, which is our second last tab. I'll just go to this tab, I'll collapse all the column, and since this portfolio was created from the compare tab, I'll expand this from compare icon. So you could see this is what we just created, compare 82. What you could do is you could firstly change the name of this portfolio. So let's say I'll just rename this. In addition to renaming the portfolio, you also will have an option to edit the allocations of schemes in the portfolio. As I highlighted, since this portfolio was instantly created from the compare tab, this will be an equally allocated portfolio. However, you will anytime have an option to change the allocations as per your requirement. Once that is done, you just need to update the changes that you have made, and then you could run an analysis on this model portfolio that you just created and saved. Now, in terms of analysis, what all you can come across, firstly, will let you know what are the schemes that are there in the portfolio. And next to the schemes, you can see what is the allocation of each scheme in the portfolio, currently being an equally allocated portfolio. Followed by that, you could see the start and end date as an option, which you could anytime change. All you need to do will be clicking on this all you need to do will be clicking on this option called as change. Once you do that, certain preset time periods are available right here. In addition to that, you also have an option to set in your custom dates too. So let's say for now, I am taking an analysis of 5 years ago. So automatically it will pick up a start date of 5 years ago. Next to that, you see this benchmark as an option, which is mentioned as reference index 1, reference index 3. So this is what we call as auto benchmarking or automatic benchmarking that happens on our platform. So if I just go to this engine and search for reference indices, you will be able to see list of 11 such reference indices that are available on the platform, preset indices. Now the platform automatically will pick up one benchmark out of these 11 for every portfolio that you try to analyze on our platform. Now, on what basis is the platform automatically selecting a benchmark? You can view the asset allocation. So, basis the equity and debt split. Basis this split, the platform will suggest a benchmark out of these 11 reference indices. Currently, it has suggested reference index 3, which is 80% Nifty 50 TRI and 20% CCIL bond. So, all the preset benchmarks that we have are typically combinations of Nifty 50 TRI and CCIL bond index. So this is what the platform is suggesting. However, you anytime have an option to select benchmarks from this NSE or let's say from BSE. If not, you will also have an option to custom create your own benchmark. So all you need to do is go to this customs tab and select this manage custom indices. So out of these list of benchmarks that you could view right here, you could add benchmarks of your choice as per your requirement. So let's say for now, I am adding a Nifty 500. You select the benchmark, click on add index. Next again, I am adding, let's say, maybe a Nifty 50 TRI. You select and add index. And again, let's say I'll just take in a debt related benchmark, CCIL bond index. And you click on add index. Once all your index has gotten added in, all you need to do is give in allocation to each index as per your requirement. Once that is done, you make sure that your allocation to these benchmarks come up to 100, post which you could give this benchmark a name and simply save your custom index. Once you save this, it will start showing up in this search custom index. You just need to go to this custom and select for your custom index that you just created, which you can use while analyzing the performance of your portfolio against that of the benchmark. So, in graphical manner as well as in statistical data, we have provided the analysis. So, graphically, the blue line is showing the performance of the portfolio, and the black line is showing the performance of the benchmark. So, in the time period that we have set in, which is a 5-year time period, it is saying that our portfolio, the blue line, has outperformed the benchmark, which is the black line. And the benchmark being reference index 3. The automated benchmark is what we are using as of now. Now, similar analysis you could view in this statistical data as well. For example, parameters like cumulative return, that is the absolute return, which is generated by both the portfolio as well as that of the benchmark. So you could see the absolute return generated by the portfolio happens to be 220 percentage vis-a-vis the benchmark, which is to an extent of 118% only. Now, in order to arrive at this return or generate this return, what is the risk that is undertaken by the portfolio as well as the benchmark? So you can come towards this annual volatility, which is typically the standard deviation. So it says our portfolio took a risk of 11.54 percentage, while the benchmark took a risk of 11.37 percentage. So you could say that although the portfolio took in a bit higher risk than that of the benchmark, it was able to generate considerably higher level of return than that of the benchmark. And we could also see that in terms of its Sharpe ratio, which is the risk adjusted return. For the portfolio, it is at 1.51, and for the benchmark, it is at 0.87. And also Sortino ratio, if we try to understand that, this is exactly similar to that of Sharpe ratio, which suggests what is the returns generated basis the risk that has been undertaken. The only difference between the Sharpe ratio and Sortino ratio is the standard deviation parameter that is taken under consideration. In Sharpe ratio, we consider both the positive and negative deviation. However, in Sortino ratio, we consider only the negative deviation to try to identify the downside risk associated with the portfolio. Both these ratios, we say higher the better. Followed by that, we come to this VAR, which is value at risk. So this lets you know what is the value of this portfolio which is at a risk. Which is at a risk of what? At a risk of losing. And next to that, you could see 95 has been mentioned, which is typically the confidence interval. So we say with a 95% confidence interval, there is a 5% probability that if history were to repeat itself, the portfolio could go down by a total of 18.7%, while the benchmark could go down by a total of 17.7%. Now, if I put it into simple terms, if 100 rupees is invested in both the portfolio as well as the benchmark, the capital erosion for the portfolio would be 18.7 rupees, while for the benchmark, the capital erosion will be 17.7 rupees. Post this, we move towards the asset allocation of the portfolio. So right here, you get to see the major division in terms of asset allocation. That is to say, the equity, debt, the underlying cash, or the foreign equity exposure that is coming towards the portfolio. In addition to that, you get to see the total exposure, that is the 100% exposure of the entire portfolio. Now, let's say I just wish to view only the equity exposure of my portfolio. All you need to do will be click on this bar graph of equity. And right here, it will show up only equity exposure, which is currently to an extent of 73.5% of my total portfolio. Now, how would you read this data is next to the name of the fund, you get to see a specific percentage. So right here for HDFC Bank, it says the exposure is to an extent of 2.95. Now, in order to understand where is this exposure coming from, we will click on this I button. So it says that there are these three funds, IPRU, Parak, and Nippon Multicap, that are there in this model portfolio that we created. And these funds hold HDFC Bank as a stock in their portfolio. Hence, it is giving an indirect exposure to this model portfolio. Now, there are three columns that you could see next to the name of these funds. The first column is mentioned as your portfolio. That is the allocation of these schemes in your portfolio. So, since this is an equally allocated portfolio that we are looking upon, every fund has an allocation of 20% currently in this portfolio. Next to that, you see fund. So, this is saying that to what extent is HDFC a part of IPRU large and mid cap funds portfolio? It is to an extent of 1.40. You can as well verify this. What we will be doing is clicking on this fund name. It will redirect us to a single fund analysis. Next, I will be going to this asset allocation tab, and right here in this overview tab, we will be trying to locate HDFC Bank. So I'll just do a control F right here. You could see HDFC Bank is a part of this fund, IPRU large and mid cap, to an extent of 1.04%. And that is exactly what we have shown in this second column. Now, basis the allocation of fund in the portfolio and the fund's exposure to that respective stock, we arrive at this weighted average exposure, which is typically a multiplication of this 20 with this 1.40. And once we total this third column of exposure, we will arrive at this total exposure of a specific equity component that is there towards our entire portfolio. Post that, we will be moving towards the equity sectoral exposure. So this lets us know the top 10 sectors that are heavily weighted towards the entire portfolio. You could click on any of these bar graphs of the sectors, and it lets us know the stocks under that sectors which have the exposure towards the portfolio and to what extent do they have the exposure towards the portfolio. Right here, we show you the top 10 sectoral exposures that way. Followed by that, we will be moving towards the drawdown analysis. Now, drawdown typically lets us know how quickly this portfolio is recovering from any loss that has happened in the past. Now, how would we read this data is right here, the first column lets us know the percent of loss. So it says this portfolio has experienced the highest loss to an extent of 14.71%, wherein the portfolio's NAV, which was at 183.24, started falling and it reached a level of 156.29. Now, when did this happen? You could see the dates as well. 17th Jan 2020 till 20th June 2020. The NAV of this portfolio kept on falling, which is equivalent to a total of 154 days of NAV downward movement. And post our end date of 20 June 2022, it took a total of 58 days for this portfolio to recover. That is 58 days it took for the portfolio to cross our start NAV. Only then you could conclusively say that the portfolio has completely recovered from this loss of 14.71%. And we also show you when did the recovery happen. So on 8th September 2022, the portfolio completely recovered from this loss of 14.71%. And when we are talking about drawdowns on a portfolio level, you would be able to view the top 10 drawdowns. Now, let's say if I try to locate this recovery date onto this line graph. Now, on this line graph, you could see gray and white region. So, white region typically shows you the recovery phase, and the gray region majorly shows you the drawdown phase when the NAV was falling. Now, if I try to locate September 2022, I'll just zoom in this phase. 8th September. Yeah. So exactly at this point, 8th September 2022, if at all we see the NAV was as of 183.29, which is indeed higher than our start date of drawdown, which was at 183.24. Hence, this date is what we have considered as the recovery date, as on this date, the NAV crossed our start drawdown date. Now, this analysis that you see, or what I currently showed on a portfolio level, you might be knowing the reporting option is a PDF and a PPT. I would also be highlighting two other reporting options as well. First is a share link, which is more like a desktop based link. Few features available in this are firstly an option to hide the NGEN Fund Score. So right here, you could see what are the scores assigned to each of these funds. If you do not wish to show this to your client, you can click on this checkbox. The fund score will not come up. In addition to that, if you do not want your client to change the start and end date in this link that you share, you can again click on this checkbox, which will lock your start and end date. Followed by that, you also have an option to force a specific benchmark. Out of this list of benchmark that we have provided, you can select your respective benchmark that you want to be fixed to a portfolio. Let's say, as of now, I want this benchmark of Nifty 500 to be fixed to this model portfolio, for example. And all you need to do is now click on create. Once that is done, you have this shareable link, which you can share across with your client. So your client who has no access to NGEN Markets will be able to view their portfolio, exactly what you as a user of NGEN Markets was able to do. So you could see fund score are not coming up. The option to change the start and end date has been disabled. And also the benchmark, what you selected as Nifty 500, comes up in this performance analysis too. And please note, this link remains active for a total of 7 days. You could reduce the number of days. The maximum days happens to be 7. And the next option that we have is this client link, which is more like a mobile based link. Once you click on that, you could simply generate a pin for it. Once that is done, just click on create link option. So we have an integration with WhatsApp wherein you just click on this WhatsApp icon, put in your mobile number, and this message reaches your client. Now, how would their portfolio be visible to them? I'll simply or quickly show you a preview of the same. I'm just putting in the pin, and this is how the portfolio will come up. Since this is a mobile view, not all the tabs, we just show you all the important tabs onto this mobile based links. First page will show you the components of the portfolio, the asset allocation, and the exposure. Followed by that is this analytics tab, which is showing you performance of your portfolio against the benchmark and the statistics for the same. Next is the markets tab, which lets you know general market movement or market performance per se. And lastly is a connect tab, wherein your client could type in a message or their comment basis their understanding of the model that or the portfolio that you have shared in. And once they type in the message, it will be received to you onto this mail ID that you have registered with us. So these were the two methods of sharing a portfolio in addition to the PDF and PPT reports that way. So that is it for the topic related webinar. If anyone has any questions related to the topic that has been conducted today, you could either unmute yourself or type down your questions in the chat box. And for those who have queries related to something which was not discussed, the topic that was not discussed today, if there is any query, you could again put your contact number in the chat box and our team would be reaching out to you for the same.
Hi, Anshu.
Yes, hi.
Hi. The value at risk, is it tied up to some kind of a timeline? Is it a value at risk for the next 1 day, 1 month, one
Uh,
year? How
sure.
does it work?
Sure. So the value at risk, or for that matter, any parameter that you're viewing right here, is respective for the time period, portfolio time period that you have set in. So I had set in a time period of 5 years ago, right? So that is what we are showing right here. Every other parameter that we are talking about is as of 2020 till 2025 that way.
But the definition of where is, it is the future possibility of how much of your portfolio you could lose, right?
Hmm.
So, but whereas here the time frame we are going in the past. So, is it then a reflection of how much this portfolio lost in the last 5 years? If
Correct. So,
if,
correct. So
if
that
that's the case, where is a question of probability coming in? Probability comes only for future, right?
uh,
If it is about past, you can say
hmm,
it with 100% accuracy. Here we
sure.
are talking of 95% probability.
Sure. I mean, probability will again anytime be basis historical data only, right? So that is why that is how you can validate a probability. So we are not saying that this will definitely happen. Historically speaking, this has happened. Probability, we are saying it could, it may not happen. Probability will anytime be basis historical data availability only. If no historical data, you will not be able to do a prediction or a probability understanding that way.
So I got it. Yeah, that was a good definition. My question is, so this is valid for the next 10 days, 1 year, 6 months? How do I see it? As long as, the portfolio is valid, this number is applicable, or how does it work? I mean, this where I should consider as a number for the next 6 months, 1 year, 2 years, 3 years. How do I interpret this number? How do I make it as a useful number to me?
Sure. I mean, what we are doing right here, as I mentioned, is historically we are saying that this could happen or this may not happen. Now, of course, there is no certainty that we could say that this can happen in the future, right? So, right here, we are not saying that you can set in a time frame that you can expect this VAR happening in the next 1 year or in the next 6 months. This could happen that way, but in order to happen, we say that if the history was supposed to repeat itself, this can happen, is what we say.
Okay. And how does it link with the drawdowns, where and the drawdown? Is there a link to them?
No, there is no such link because drawdown is typically showing you how is the NAV movement falling, right? Sorry, NAV movement falling. And if you talk about VAR, this is typically showing you with a confidence interval. We are saying that there is a 5% probability of a specific thing happening if history were to repeat itself.
And this is applicable for all the funds in the portfolio, right? This is a portfolio level VAR,
Portfolio
correct?
level, yes, this is a
Mhm.
portfolio level that we are talking
Mhm.
about.
Okay, thank you.
Can you
Anshu, very good
explain this
evening. Guru here.
again, Ansha?
Sorry, what?
Can you explain this again? The like what you just said, 5%, the chances of
Sure,
it.
sure, sure. So, value at risk says what is the value of your portfolio that is at a risk of loss, at a risk of losing. So, right here, you see 95 comes up by default. So, it is an industry standard to keep your confidence interval to be either 90, 95, or 99. So we say with a 95% confidence interval, there is a 5% probability that if history were to repeat itself, your portfolio will go down by a total of 18.7%, while the benchmark will go down by a total of 17.7%.
Which means it is performing for this parameter, it is performing worse than the benchmark, right?
Yes,
But
apparently.
any other portfolio may have performed better, but this particular is not performing as much, right?
Yes. So apparently, if you see, there's more like a difference of 0.5 or like approx of 1% difference
Yeah,
that
1%,
forward.
1.09%.
Yes.
So the probability of 5% probability that this will perform 1.09% worse than the benchmark, right?
Correct. 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 With
And
a
what
correct 5% probability, which says
5%?
95% is a confidence interval. Correct.
So,
The rest 95% it will perform better, right?
Yes, historically speaking, we are saying 5% of times we are saying it could go down by 18% for this portfolio. 95% we are confident that it will not go.
Okay, 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 okay.
so Anuj, is it a good interpretation if one were to look at the CAGR and the VAR, and if the CAGR is more than the VAR, to feel that you are on a net positive zone? So the best scenario of a CAR has been 26%, whereas the worst case scenario of losing is 18% in this case. So even if the worst hits you, you are kind of protected. Is that one way of interpreting if it is right? Is it right? If I
Yes, this also shows you the protection too, because we say if this is the loss that you're expecting, the remaining percent, let's say near about a 80 or a 78% will be the capital that will stay intact or will stay protected.
that's clear. My question is, can I look at the CAGR, annual CAGR? I get typically 26% returns, and there is a possibility I may lose 18%. So even on the worst case, I'm kind of protected. Is that a fair interpretation to make?
Yes, I mean, you could say that as well, because we are saying that
Mm,
if the CAGR returns are to an extent
mhm,
of 26% when
mm,
vis-a-vis when we compare it to that of the benchmark, and if we talk about the VAR, we could interpret it that way as well.
mm. Yeah, if the CAGR were to be 16, which is the example with the benchmark here,
Hmm.
maybe that's a red flag for me that the
Correct.
VAR is 18 minus 18,
Yeah.
CAGR is
So
16. So the
it's
kind of,
not
yeah,
even generating a good return, and also
correct.
you could
Okay.
expect a downside of 17 too.
Yes. Okay.
Guru
And
here, Anshu. Can I
Yes,
go
yes.
ahead?
Please go ahead.
Okay, I have a question with regard to the overlap.
Sure.
Can you take me to the overlap section?
Yes.
In the overlap section with regard to this particular portfolio, we were looking at
Yeah,
26%, which is
correct.
common for two of the funds, correct?
Right.
Now, this is as of today.
Correct.
Now, going forward, it may increase, it may decrease also.
Hmm.
What is the frequency you suggest for us to have a observation on this?
I mean, the underlyings anytime change on a monthly basis, right? Every month end, you will be able to see that the changes happen. So on
Okay.
our platform, I'll let you know what is our update cycle as well. So from
Hmm.
8th to 13th, our holding updates run on the back end. So by 14th,
Okay.
you will be able to see the latest underlyings for each of the funds that you're looking upon.
What do the normal update dates, apart from this platform by
I
the
mean,
AMCs?
I'm not sure how it comes up. We that way updated from 8th to 13th. So as soon as we have the data from the AMCs and our data provider, we keep on updating it. And the
Okay.
final update will be on 13th. By 14th, the latest data for all the schemes will come up.
So as far as the overlap details data is concerned, the update happens 14th of every month. I can
Yeah,
understand.
by 14th, you can see the total. Correct. By 14th, everything will be there.
Thank you, Anshu.
Sure.
That's in your platform, right? I've
Yes,
seen these
yes.
emails from these, AMC houses
Hmm.
the first week of every month. Each of them say this has been the portfolio changes. And then you guys, I think, take 2, 3 days to kind of consolidate, route it through your software and update this year. Yeah, I think,
Yes.
yeah,
So,
yeah.
as I also highlighted, if the data flows in a bit quicker from through our data provider as well, we do update it early too. But
Mm,
in order to just have a proper date or rather a timeline of update, we mention it as 8th to 13th.
mm.
Hi, Anju, can you go to this drawdown
Sure.
graph? Yeah. So, can you show drawdown in the graph and how much time did it take to recover vis-a-vis the gray area? You showed,
Uh,
I could not
yeah.
catch.
So let's say I'll just try to explain this itself. The first loss of 14%, which was experienced from 17th Jan 2022. So I'm just, let's say I'll just zoom in this section, right? So this is the first point when the NAV started falling. 17th. Yeah, I think near about at this place. Sorry, Jan we are talking about. Yeah, right here. So from this date, if you see the NAV kept on falling, and that is we've defined as the gray portion till this date, which is 20 June 2022.
You have taken the first date as the 20th June 2000. No, no, first date as November 21, right?
No. First, I'm talking about the first drawdown right here.
Yeah,
17th Jan 2022 has been picked up the first date of
yeah,
drawdown.
yeah,
So the NAV was falling post this date, right? So once
yeah,
it kept on falling, it reached this location of 20 June 2022, post which the NAV kept on increasing,
yeah.
right? So as I mentioned, kept on increasing, hence you see a white region right here. And it says on
Mhm.
8th September, it finally recovered from this loss. So you see 8th September, the NAV is 183.29, which is higher than our start NAV, start price. And
Oh,
hence we
oh,
declare that date to be the date of recovery.
oh, oh, understood, understood,
Sure.
understood. But then it may go on from there, or again it may go on to a drawdown phase like it has gone,
Yes,
right?
it has.
That's
It
just
has.
coincidental. That's just coincidental.
Yeah, I mean, it depends.
Yeah,
It could go down, it could go up. That depends on typically the fund performance, how it is moving, and the market movements as well.
that. Understood. Thanks.
Sure.
Anju, I have a good question.
Yes.
Yeah, while selecting the funds, you have selected basis the NGN
Fund
rank.
score. Correct. Yes.
Yeah, so suppose I want to compare the large cap funds and I want to do my own analysis basis the ratios which you are taking into consideration, maybe the Sharpe ratio, Sortino
Hmm.
ratio, downside capture ratio, XYZ trainer ratio, or maybe on that grounds along with the returns. So what
Hmm.
are the bases of comparing the funds and adding into the portfolio if I don't want to go by the engine ranking? So
Uh, I mean, sure. You are currently talking about a single category only, right? So let's say you mentioned about large cap.
yeah,
So what
sure.
you could do is go to this
Mhm.
fund section. I'll just
Mhm.
remove all the filters that were set in,
Mhm.
and I'm just selecting the large cap as a category, and the entire category will load onto your screen. Now,
Sure.
you see the entire category has a list of 33 funds. Right
Okay.
here itself, let's say you wish to cap it basis the age of the fund or an AUM, as I initially did. You could also do that so that the
Mhm.
funds which are, let's say, younger, 3, 5, anything you can put in. I'm just putting 5. Funds which are younger will get removed from your list if you want to do that. Now we are left with 25 funds that way.
So when you're putting minimum age, so it is
Hmm.
taking the funds with minimum age or it is excluding funds with minimum age?
Yeah, so it will be removing the funds which are younger than 5 years. We are talking that I
Okay.
want the funds which are 5 years and older,
Okay. Okay.
right? So your fund got shortlisted. Now, again, if you wish to shorten it or filter your list basis AUM, you could put in
Mm-hmm.
an AUM parameter, a minimum AUM range. And
Mm-hmm.
also, if you wish to shorten it or basis a specific time period return, you could do that as well. Once that is done, all you need to do will be click on this option called as add top 50 to compare, and just by a click, the entire list of large cap funds has gotten moved to this compare section.
Okay.
So once it has come up, you can view the parameters CAGR, standard deviation, Sharpe, Sortino, VAR. However, just one thing that by default, the funds, when you bring it to the compare section, these parameters CAGR, standard deviation, Sharpe, Sortino, and VAR. These
Mm-hmm.
5 parameters for each scheme will be since their inception. You could set in a respective time period as well by clicking on this settings wheel and putting in your respective start date. And it will start coming up for the time period that you have set in. And then you will be having an option to sort it basis either of these columns and then shortlisting your fund.
Okay. And if I want to check it vis-a-vis the benchmark, maybe within the peer, what is the ranking of a particular fund? Maybe you can talk about the HDFC large cap fund, where it is ranking in its peer and vis-a-vis how it is performing with its benchmark, the
Sure.
ideal benchmark it should do.
So you can simply add the benchmark from this option called as add other items. You can
Mhm.
search for the respective benchmark. For now, let's say I'm adding Nifty 100.
So is Engine is providing anything which could be like taken as a benchmark, any suggestions from Engine side, or we have to just take it or as per our understanding?
I mean, once you go on a single fund analysis, you will anytime
Mm.
be able to see the fund manager declared benchmark as well. You could
Okay.
anytime go forward with the same. However, we've given you an option to add benchmarks as per your requirement too. Just right here.
Okay.
Yeah.
Okay, but okay, we just selected the fund. We just selected the benchmark. So how we will be basically seeing the three things. One is how it is ranking among the peers. Second is how it is performing basis the benchmark. If I want to check, suppose HDFC one. So HDFC large cap fund, I want to check its performance vis-a-vis its peer, vis-a-vis its benchmark. Can I see that? Is there any option on that?
Yes, I mean, that is what I just explained, that parameters are anytime available right here. You can sort your data just by clicking on the column heading. So
Mm-hmm.
I've sorted it basis a Sharpe ratio for the 5 year, basis a start date that I have set in.
Mm-hmm.
Right? So if you're talking about basis the Sharpe ratio, your
Mm-hmm.
benchmark is getting plotted very low right here if you see. The Sharpe ratio is to an extent of 0.82, while HDFC in comparison to the other peers is having a Sharpe of 1.04, while Nippon has 1.2.
अच्छा मैं आपको लाइव देखा
Okay.
अभी
कहाँ
बंद
देखा?
कर
ये तो कुछ
अभी तो बंद कर दिया
Okay. Can you throw some light on the correlation tab also?
If you can drop your contact number in the chat box, we could connect with you maybe for a training session as well. As I highlighted, we are just covering topic related questions for today.
Yeah, that works. I can drop the contact
Sure,
details.
sure.
Yeah, thank you so much.
Yes, no
Yeah,
problem.
hi,
Yeah,
Anshu.
hi Anshu. I have a question. Initially, only you explained the NFS ranking
Yes,
30%, 30%. Can you just go back to that?
yes, this one. Yeah. Fund score ranking, right?
Yeah.
Yeah, you want me to explain this again?
Yeah, again, the initial part.
Sure. So, as I mentioned, the parameter of how the score is arrived at, 10% weightage is given to the AUM of the fund, and the remaining 90 is distributed equally between the short, medium, and long term returns and volatility. So 30-30 each for short, medium, and long. Short is 1 year, medium is 3 year, and long is 5 year. And age also happens to be a parameter consideration right here, which is to say that a younger fund will have a lower score when you compare it to that of an older fund, typically because younger fund will not have enough data to prove its performance against the market. And as well, it is comparable intra category, that is within category comparison, and changes on a month on month basis.
So 10% AUM, 30% short-term return, 30% medium-term return, 30% long-term return, right?
Long-term returns and volatility for each. Short-term returns and volatility, medium return and volatility, long return and volatility.
Volatility means standard deviation,
Standard
right?
deviation, correct.
Not Sortino and other ratios and
Correct.
alpha and all that.
Correct. It's standard deviation.
And then you additionally have the age of the fund, right?
Correct.
So typically a fund, say with less than 3 years and less than, say, a new fund, less than 1,000 or say 15,000 crore of AUM, it will have lesser ranking.
Typically, yes, that will be a disadvantage that will be there within younger fund. But as I also highlighted, as soon as it completes a time period of 5 years in the market, its consideration will be same as that of an older fund, because for long, as I mentioned, 5 years is what we consider.
Okay, so typically, so if I say your fund score will have a bias towards funds with 5 years of age or more, right?
Uh,
I'm
uh,
generally saying, I'm not saying bias means in the sense of bias.
hmm.
I'm just saying because it has more historical
Data,
data, not that
yes,
you have
correct.
any bias per se.
Hmm.
But suppose a new fund, I'm saying a new category, a multi-cap category, or focus category, just 1 or 2 years after its inception. How would you do that? Okay, then it would be same for everyone, like that.
Sorry, I did not get that
A
question.
multi-cap which has
Huh.
not completed 5 years by
Huh.
now.
Hmm.
I believe none of the funds would have completed 5 years by now, unless until they are an old fund recrescent as multi-cap fund. So I'm saying in that case, typically you will not have full data up till 5
Yes,
years.
so in that case, let's say if that entire category has all the funds which have not completed 5 years, their score will be lower that way.
Okay. Another question, the same thing you said that it has to be compared in the same category.
Hmm.
Now, tax saving and retirement aggressive plans or equity plans are typically taken as proxy to FlexiCap, just with some solution or some limitations.
Hmm.
So can that be compared? I'm just giving an example, a
Um,
10-year-old tax saving fund, ELSS fund, or say a 10-year-old retirement equity plan. Can that can
no,
the NFS score be compared? I'm asking.
no. Specifically, it is SEBI category wise comparison only that way.
Okay,
We
so
cannot
NFS is
compare it.
also with respect to other funds in the same category, right?
Correct. Fund score is basis funds in the same category only.
Well, it's a relative score. It's not an absolute score
Correct. It
published.
will be a relative scoring because it is intra category comparison, not inter.
Okay, thanks. Thanks a lot.
Sure.
Hi, Anshu. I had a question.
Yes.
Yeah, so this was with respect to the comparison of funds within the same category.
Sure.
Uh, so can the parameters be customized, or it is as per that what was
Sure.
shown?
As of now, these are the parameters that are there. No customization are possible for the NGEN Fund Score at the moment. This is what
No,
is
no,
there.
no, no, no. I'm not talking about the fund score. I'm saying when you're comparing the funds within the category to
Huh.
where you just
Yeah, yeah.
showed, yeah,
Huh.
this.
Huh.
So if is there a possibility now, for example, the returns here are
Hmm.
lump sum returns, right?
These are CAGR returns. These returns you're
See,
talking about?
the CAGR returns of lump sum investment, or it could be SIP investment as well.
No. So for SIP, we have monthly SIP. These are the normal CAGR lump sum basis.
Okay. So now suppose I want to make a selection based on customized parameters. Let's say 7 or 10 parameters which are not mentioned here. Is that a possibility?
Okay, adding your columns or your parameters you're specifically
Yeah,
talking about.
yeah.
No, we do not have that feature wherein the user will be able to input their specific columns as per their
Or
requirement.
can it be filtered based on your fund comparison segment, wherein you select, let's say, more than 5 years. Then, if you want to do performance,
Hmm.
and then if you want to do something else, can it be filtered as per that logic?
I mean, you mentioned age basis, right? Filtering funds, firstly, what you mentioned was basis age, if I'm not wrong, right?
Right.
Yeah, so that is what we did right here, right? We filtered it basis the age.
Correct.
So we got the list of funds. Next, I did not get the question what you were referring to.
Yeah. So, suppose next I want to do it on the basis of, let's say, 5 year return, and
Okay,
then
sure. So, I mean, right here, you have an option 5 year minimum return, right? Or a range you want to set in. We
okay.
have the option to do both. If you're talking about a 5 year return in the screener section itself, there's a minimum
Mm-hmm.
return column. Just select 5 year and put in your respective return range right
No,
here.
so the filters that you've put here,
Huh.
are these the only ones we can put, and we
Yes,
can't put any other
yes. Right
filters?
here, the filters are these 5 filters only. In the query as well, there are multiple filters, but these filters will anytime be predefined by us. The user will not have the option to put in their data or their columns.
Okay, understood.
The question was going to be around that. I know you're running out of time. Maybe I'll be very brief. In the filter, is there a way additional parameters can be included? For example, the upside and downside. I believe that's a nice
Um,
parameter to have.
sure.
I don't see it. If you can go back to the filter again
Yes. So
very
the
quickly.
thing is,
Mhm.
filtering the funds basis capture ratios, if you are talking about, it is not
Correct.
possible in the fund section, because in order to the capture ratios to be coming up, benchmark data has to be there. So in the fund section, as I highlighted, this is the option to only filter funds. There is no benchmark data available in the fund section. You could anytime do that in the compare section. So in the compare section, you will be required to go towards this relative returns column, set in your benchmark, and then we have these columns called as up capture and down capture.
Mm, okay. Got it.
Sure. Okay, so there's a question in the chat box, how to see the previous session. So we have a YouTube page within the platform itself. You can just click on this YouTube icon. It will redirect to our YouTube page. We have a dedicated playlist for all the webinars that have been conducted up until now. So you could view the previous webinars right here. There's another question. Do we have 5, 7, and 10 year comparison option? Yes, we do have that. You just need to bring the funds to the compare section. And once you scroll towards the right, you can come across these time period returns as well. These are also available in the funds screener section as well. I'll just select the preset column views to return columns. and you can view these returns accordingly.
Thank you. Thank you very much. It was useful.
Sure. Any more questions? Please let us know.
मैडम,
Yes.
मॉडल पोर्टफोलियो कंस्ट्रक्शन में क्या
हाँ.
हम लोग मतलब इन वैल्यू हम लोग ऐड कर सकते हैं? यहाँ पे तो हम लोग परसेंटेज में कर सकते हैं। मान
हाँ.
लीजिए मुझे 20,000 रुपीज का एक सिप का पोर्टफोलियो बनाना है। मुझे
हम्म.
कभी कभी वो परसेंटेज में ठीक है, लेकिन जैसे मान लीजिए मुझे 6,000 लार्ज कैप में देना है, 4,000 फ्लेक्सी कैप में देना है, उसी
हम्म.
हिसाब से ये ऑप्शंस होने से अच्छा था मतलब।
आई मीन वो आप कर तो सकते हैं। ये क्लाइंट सेक्शन का जो मैनुअल डेटा ऑप्शन है, यहाँ पे आप मैनुअली क्रिएट कर सकते हैं पोर्टफोलियो। जैसे फॉर एग्जांपल मैं यहाँ पे एक क्रिएट कर देती हूँ। सो यहाँ पे आप वो स्पेसिफिक जो भी फंड है जो आप आपके क्लाइंट को रेकमेंड करना चाहते हैं, आप यहाँ पे डाल दीजिए एंड देन आप इसका अमाउंट पुट इन कर लीजिए जो भी आपको चाहिए।
ओके।
राइट, सो इस तरीके से आप अमाउंट बेस्ड पोर्टफोलियो भी क्रिएट करके एनालाइज कर सकते हैं दैट
वो
वे।
क्लाइंट सेक्शन में जाना पड़ेगा ना मैम?
हाँ, क्लाइंट के मैनुअल डेटा में आपको जाना पड़ेगा।
क्लाइंट का मेन्यू। ओके, थैंक यू।
Sure.
मतलब कि पहले स्क्रीनर से उसको चेक कर ले
हाँ.
और उसके बाद फिर यहाँ जाकर उसको अमाउंट वाइज कंपेयर कर ले, राइट?
हाँ,
अमाउंट वाइज
अमाउंट
डेटा रन कर सकते हैं।
पुट इन करना पड़ेगा, करेक्ट। बिकॉज यहाँ से जब आप कन्वर्ट टू पोर्टफोलियो क्लिक करते हैं, वो बाय डिफॉल्ट ये पोर्टफोलियो टैब में जाके सेव हो जाता है। अगर आपको वो अमाउंट बेसिस में ही चाहिए कि आपको परसेंटेज नहीं, आपको अमाउंट बेसिस में चाहिए, तो आप ये क्लाइंट्स में जाके मैनुअल डेटा में जाके आप वो मैनुअली क्रिएट कर सकते हैं दैट वे।
एंड देन रन कर सकते हैं।
हाँ,
एक बार
रन
जस्ट
कर।
बताएंगे कैसे रन करते हैं, वो मैं प्रोसेस भूल गया। मतलब आपने
हाँ, आई
पोर्टफोलियो
मीन
तो
आप
जस्ट जस्ट
पोर्टफोलियो,
वो प्रोसेस।
श्योर, आप पोर्टफोलियो जब सेव करोगे वो आपको ये लेफ्ट में देखने मिलेगा। आपको
जी।
सिर्फ उसके नाम पे क्लिक करना है, तो ये होता है आपका पहला पेज। और यहाँ पे रन एनालिटिक्स करके ऑप्शन पे आप क्लिक करोगे तो ये
अच्छा,
पोर्टफोलियो
अच्छा।
एनालिसिस शो करता है।
और इसी का आप लिंक भेजते हो, राइट? जो भी
आ,
आप जो आपने बताया था।
हाँ हाँ, करेक्ट। सो एनालिसिस एनी टाइम प्लेटफॉर्म पे सेम होता है, क्लाइंट्स टैब हो जाए या पोर्टफोलियोज टैब। जो भी आप टैब्स यहाँ पे देखते हैं एग्जैक्टली सेम होता है जो आप दोनों टैब में देखें। लिंक भी यही सेम ऑप्शन है, क्लाइंट लिंक, शेयर लिंक।
ठीक, थैंक्स थैंक्स, आई मिस दैट दिस
श्योर,
स्टेप।
नो प्रॉब्लम।
I just have one small query here.
Yes.
If you can go to just compare section.
हाँ.
Yeah, the scoring which you are doing this NGEN FS and RET-FS. So as per the score, yeah, it is showing. What are these other things, risk and RET? What are those?
Yes, so this is return score and risk score. So risk score lets you know typically the volatility protection capability of a fund. Here we say higher the better. Higher is the score, better is the volatility protection. And return score, as the name suggests, higher is the return, higher is the score. So how is the fund generating returns? And we say each of these score, higher the better. That is closer to 10, the better it is.
So this return score has nothing to do with your CAGR return, basically.
I mean, this is a score that we arrive at basis 1, 3, and 5 year return, which will be CAGR return only.
Acha. Okay. I got it.
Sure.
Thanks.
Hello.
Yes.
For a debt fund, do we have the option to get the exposure of all those papers fund is invested in? Suppose AAA, AA.
Yes. So
Bifurcation is
typically, if
there.
you're,
Oh,
yeah, we do have a column. I'll just show you. So debt related columns, okay. We do have those columns, the sovereign rated AAA, AA, single A, and others as well. We have these columns, which is typically showing you the underlying holdings of these debt funds.
And just a follow-up question, you guys, via NGEN, you provide the P of a particular fund, correct?
Correct. PPB for the
So
funds is what.
is this your own proprietary thing, or because it gets very difficult, no, to get the P of a fund, because you have a lot of companies under one fund. I mean
Uh,
one scheme. So it
sure.
gets very
So
difficult because you have a universe of companies, and then you have to take out the average, or I don't know what parameters you use to get to a to the P level of that fund.
sure.
So it's your proprietary thing, right?
So P and PP, we receive it from our data provider, which is CMOTs, initially called as capital lines.
Okay.
These are not calculated on our backend. We get it from our data provider.
CMOD, okay.
CMOTs.
Because any no fund houses, they do not have such metric P or PB.
Sure. So we retrieve it from our data provider that way.
Okay, nice. Thank you.
Sure.
Hi, Anshu. While you are showing the portfolio of a mutual fund,
Hmm.
is foreign fund shows as a fund of fund or as a foreign stock or how? Because I've seen sometimes foreign stocks and foreign funds in the same category, or domestic fund of fund, domestic funds and foreign funds in the same category.
So if there are any foreign stocks, we do show it as foreign equities. So for example, if you're talking about Parag Parikh, which does has a foreign exposure, we show as a bar graph of foreign equity right here.
Okay. Suppose like go to a DSP value fund, which has a lot of funds also of
So in
foreign
that case, we just show you one level drill down only. Right? It will show you, it will come up as a mutual fund bar graph in that case. Yeah, so you see there is this bar graph of mutual fund. So saying
Yeah.
that
So,
these are the funds that are there,
so
foreign mutual funds.
there is no classification as per like domestic mutual fund and foreign, because some funds also have domestic mutual funds.
Yes, domestic and foreign will be there. So if you see right here, it is mentioned as mutual fund, highlighted as foreign mutual funds. If there had been certain underlying Indian mutual funds, it will come up as Indian mutual funds as a bar graph altogether.
Suppose it has both, so it will show two categories there in
Yes,
asset and
it will show mutual funds and it will show Indian as well as foreign.
okay, it will show in one category only, but it will show that it will mention that it has both, right?
Yes.
It will not
It
mention two separate categories, Indian
uh
mutual funds and foreign mutual
it
funds,
will
is what my question.
it will show Indian mutual funds as well as a mutual fund bar graph will also be there.
Okay. So, can you show, say,
I'll
DSP multi-asset, which has Indian mutual
Okay,
funds
sure.
also, means a gold ETF as well as.
Anshu, can you do a proper trading session? I
Sure, sir.
think
No problem.
yeah.
Okay. So it does shows as mutual funds only right here.
Okay. Okay. Thanks.
So, any more questions? Please let us know.
Anshu, where should I drop my contact details? I mean, I can't see
Uh,
the option.
yeah, could you see the chat box? You could just drop it down there.
It is showing message to everyone. If I can drop.
Yeah, you could do that as well. If there's no problem on your end, you could do that too.
Anshu, is there any option to share personally?
You can write to us then, or if not, you can reach out to us. There's a knowledge tab. Just click on that and you have our office landline number. You can reach out to us. If not, you can write on the support mail as well.
Sure. Thank you.
No problem. All right, if there are no further questions, we'll be closing for today. Thank you all for joining in. You could anytime visit our YouTube page. As highlighted, we do have a dedicated playlist for all the webinars that have been conducted up until now. Today's webinar will as well get uploaded onto the YouTube page. Thank you all for joining in. Hope to see you again next week with a new topic. Thank you.